Consumer spending remains strong, though some sentiment trackers are showing a pullback in confidence as prices rise and inflation grabs more headlines. Courtney Reagan joins us now with a look at how discount retailers may become more attractive to investors. Good morning, Court.
Hi, Mike. So discount retailers, of course, tend to attract more shoppers in economic downturns. We know that. But recent traffic actually suggests many shoppers are hitting the discounters as inflation begins to heat up. So while average hourly earnings were up 5% in October compared to last year, when you take the rate of inflation into account, real hourly wages actually declined more than 1%, according to the Labor Department. Consumer sentiment did rebound slightly from August low in their latest reading, but the last 2 months average out to the weakest reading in a decade. In-store traffic data from Placer.ai shows an uptick in retailers that sell at lower prices. Traffic in October compared to October 2019 is up 21% for home goods, 16.5% for Target, more than 13% for Ross Stores, 11.5% for Burlington, and nearly 5.5% for Walmart. The big box players like Walmart and Target, we know, are using their size and scale to navigate the supply chain congestion, like chartering their own ships for cargo, so they're able to still offer these lower prices. The off-price players are taking advantage of the inventory dislocations from the past 18 months to buy up merchandise at attractive prices to then offer those in-store treasure hunters something to really salivate over. And investors are starting to take notice of the opportunity in the discount space, with a number of stocks well outperforming the S&P 500 over the last month. So look at shares of Dollar Tree, up 15% since that September read on inflation came out in mid-October. Of course, we've had a second reading since then. Five Below shares up 16%. Target shares higher by 12%. Mike, back over to you.
To me is the dollar store piece of this. You mentioned the recent gains in those names, but they had been so weak beforehand because the conventional wisdom was they didn't have pricing power, they couldn't pass it through, they have a cap, and then of course they're dealing with the same supply and cost issues on the back end.
Yeah, absolutely. That has been a little bit of a surprise. And if you'll remember back during the financial crisis, we saw shoppers sort of trade down in some cases to those dollar stores, particularly for those fill-in trips. So maybe they're not doing all of their grocery shopping, or they're not refilling all of the supplies in their toiletry cabinets. But when they need something, they're going to that dollar store instead of going to the bigger box stores. And so the traffic and the sales there are going to be something to watch, especially when we get more color from the earnings reports as they start to trickle out.